The following is a presentation of TFNN. Live at TFNN, the Money Masters. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Tom O'Brien.
Welcome, folks. We appreciate you growling and prowling with us out here. Right now, we have the Dow up 316. You get the NASDAQ up 126. S&Ps are up 60. You get a nice bounce going in the marketplace. And bottom line, folks, is that volatility is here and here in spades. And that's one beautiful thing. DAX in Germany is up, 424. Let's go through some of these numbers overseas first. So what we had overseas last night in Asia is just insane. You had the Shanghai down 7.6%. Hang Seng was up 0.7. You had the Nikkei down 3.9 rather, and Taiwan was down 3.7. In Asia, in Europe this morning, you have the DAX up 4.3. You get the CAT up 3.9. You get the FTSE up 2.6. Our own markets right now, the Dow's up 2. The NASDAQ is up 2.8. S&Ps are up 2.1. What you're going to see out here is a dead cat bounce. That's it. That's all she's going to be right. You'll see that expansion. The expansion will be on lighter volume. And we'll see, and you'll get a decent feeling, by the way, of what the ranges are, because what the market did out here yesterday is this, okay? The market showed its hand, and the hand that it showed, folks, right across the world, is that it took apart swing points, took them apart with volume, took apart the October 2014 level. Once you took apart that October 2014 level, guess what? Bottom line, you're going a lot lower. And we ripped it apart, by the way, okay? We just didn't take it apart. So what do you have next? Next, you get a dead cat bounce. You pull up, you get lighter volume. You got to trade this against the swing point. We'll see where this whole thing shakes out. What I do expect is that, right now, if we take a look at the highs from last night, if we go take a look at the E-minis first, I expect it's going to try to get into this and test the top of it. And the bottom line is that, you can decide what you want to do on this, but bottom line is that even today, the E-minis last night, they got to 1947. We're at 28 right now. They can get to probably 38, 35, another 10 bucks up. If we take a look at the NQs are trading 54 right now. They want to try to get into that 78, 80 area once again, but there's no juice there. What we do have is that you had that spike up at 83. Can the 83 get tested? Yeah, I hope it does get tested. But it looks like right now that, I suspect before I get off the air, it actually will get tested, even the 80 level. And we'll see where the whole deal is going to shake out. If we go over to the gold contract, we're going to have a gold. They're hitting gold pretty good. It is down 14.90 right now, and that little baby, though, is down on lighter volume. Now, what we did need, which is really dynamite, is that we had a couple calls yesterday and, talking about the gold stocks. Well, bottom line, folks, is that we needed actually a lower lows out here in these gold stocks, and that's what we're getting this morning. And the volume is contracting, and that's exactly what we need. If we look at an Eagle yesterday, we did 5.8 million. They're doing 1.2 million right now. And that's a lot of volume, by the way, okay? But I would expect what you're going to see is that you're going to see these rejections of prices out here today. The volume will be lighter than yesterday, and more than likely we'll see whether it's lighter than what we're going into. That is a nice heads up. What we have across all markets, folks, is high volatility, not necessarily divergence, but you're going to get moves that you're not expecting. That's how fast markets move. That's what it comes down to. What is going to be intriguing out here inside the metals market in particular is that just as I was starting the show, what's coming across in Europe is that there's been rumors forever that the bottom line is that our own banks have been manipulating basically the price of gold and silver for long periods of time. At the Exchanges, the bottom line, especially with J.P. Morgan, they've investigated them at least twice in the last 10 years, and bottom line, nothing came about of it. Well, what's going on now after this currency deal, what just came across the tape out here is that, guess what, there is going to be another whole deal going on that's actually starting in Europe about the manipulation inside the spot market in gold and silver. You know, I expect what you're going to see out here is this, is that more than likely you got to, you know, the whistleblower deal inside the marketplace, folks, is bringing people out left and right. Bottom line, I expect, just looking at that article for a second, it's like, you know what, they get themselves a nice little whistleblower right now, and we'll see what bank is going to get blown up next, and what the ramifications are, and how big the ramifications have been, you know, because these banks have been taking basically their clients to the market forever. I mean forever. So it's going to be intriguing watching this whole thing shake out. Some of the, if we first look at the Dow Industrials, see the strength versus the weakness. There's not one Dow stock that is in the red. The leader out here today is Apple. Apple is trading at up 560 at 108.73. You got J.P. Morgan up 257 at 62.83. Disney's up 345 at 98. You have Goldman Sachs up 576 at 185. The laggard, even though it's still in the green, is Merck. Merck is up 1 penny. Pfizer is up 27 cents. Inside the NDX 100, strength versus the weakness, this is what you have. The strength is JD.com. That's up $2. That stock has been absolutely smoked. Netflix is up $7.60 at 104.37. Gilead is up $6 at 106. In fact, there's only one stock that is negative inside the NDX 100. That is Discovery Communications, is down 3 pennies. So bottom line, you can see that the game is on, the bounce is on. If we go over and let's first just take a look at J.P. Morgan, because we know, listen, J.P. Morgan, bottom line, you know, huge bank, one of the largest banks around, flat out. Go. Let's put this up here, J.P. Morgan. So what we're looking at with J.P. Morgan, she's at 62.83. You've done 5 million shares. You come down yesterday on 36 million. We'll see how this handles it. Bottom line, J.P. Morgan can actually trade up to about the 65 level. When you're looking at these equities, folks, what you want to do is this. Equities love, and everything loves to go back to where they broke down from. And J.P. Morgan broke down from the 65.20 mark. You know, we're at 62.68. 65.20 is game. That's the real bottom line. It's game up into that level. I suspect a lot of the other ones are game also. Thank you, God. Come on, here we go. Just one more quarter point. I'm going to flip this position right around. There she goes. Bye-bye. See you. Don't want to be you. The NQs just did it, folks. Okay, so check it out. NQs. Thank you. See that? Okay, so the NQs just got to, there she is. Okay. We just got to 80. Oh, look at that. Look at how many cells are up there, folks. That's pretty sick. Okay. The cells are just sitting there, man. So that was just the flip from going long to short. That's interesting, man. There's a lot of cells up there. Now that'll push right in there again. Okay. It's not going to just basically go away. But bottom line is that level there, you know, is going to, you know, have some heavy resistance all day long. I expect, you know, you're going to push through it a little, but it's not going to be, bottom line, push through it for long periods of time. 877-927-6648. Give us a call, folks. Want to know what's going on in your world. So in the world of the, let me pull the Qs up for a second. I'll just put the Qs up versus the NQs. Futures trader. Okay. So if we take a look at the NQs, what you have out here is that the Qs, you're up at 102.04. This little baby, what you're going to see is that she's up. She's going to try to get into the lows that were established out here last Friday, which is 120.40. And we'll see what kind of traction she gets as she tries to get into that level. I suspect it's going to be really hard to not only get in that level, but to stay in that level. That's kind of how this whole baby is set up at this particular point. NQU5. So we put the 10-minute up here And the cool thing, there's no doubt with volatility, folks, is that whether you're a bull or a bear here, bottom line is that as long as you the swings are going to be large, and with large swings as basically larger opportunities and larger risk. Okay, so bottom line, if you're going in or you're going out, well, guess what? Make sure you do it with limit orders all the time. Do not ever put a market order in, man. Don't even think about it. Listening to the press out here this morning was really intriguing because what you had is that people really didn't understand. They were talking about arithmetic trading. They were talking about machines and all that. All they had to do was market orders. Yesterday, the open out here, it was all about market orders, man. Market orders. If there's not a bid, guess what? It goes down to whether there's the bid, and they pull the orders. That's when you cut to the chase. That's the bottom line. That's how you can open up 1,000 down, because all these folks have market orders in, which is just insane. Okay, and if they wonder why they get taken to the cleaners, that's why they got taken to the cleaners in a very large way too, by the way. So it's pretty intense. There's no two ways about that. Our phone number is 877-927-6648. We take a look at let's go take a look at, there she is, the IWM. We pull up the small caps. So the IWM right now is trading at 111.99. And that little baby, let's see what we got. IWM. You stay right there, folks. We're coming right back. Our phone number is 877-927-6648. Dow's up 326. Nasdaq is up 129. S&Ps are up 59. We're going to be right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, oil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We have the Dow right now up 284. Nasdaq's up $1.20. S&Ps are up 56. Gold's down $19.30 at 1134. You have silver down 23 cents. And, with that aspect, is pretty wild because, here, what do you see this? Randgold Resources. Man, there's so many opportunities out here. It's sick. So Randgold is not even down, and gold's down $20. That's about as intense as you get. Randgold right now is trading at, it's up actually 4 cents at 62.53, which is just sick. So it's going to be interesting watching this whole thing shake out. It was higher in the day. It got up to $65. Bottom line, you're at 62 right now. And, we'll see where this shakes out. But that is a nice indication that these things, they're not going to be able to bang these things down. Let's go pull up that contract for a second, and we take a look at that contract. So we're at 1135 intraday. Let me put this up intraday for a second. Let's see what we got here. So intraday, you get a nice spike down, no doubt, man. They spiked this down. They spiked it down good, too. So that spike lower will get tested. Let me just see this for a second. So we hit a low out here of 1134. No, it doesn't have to. So check it out. So the high volume low is 1136.50, 1136.30. We got to 1134. You're going to see a rejection of lower price here. This is going to be interesting, man. Yep. So watch what we have. At 10 o'clock, there she is right there. At 10 o'clock, we got, is that the 10? No, it's the one right before that. It's different on this one. Okay. So at 10 o'clock, we got to 1136.30, 11,000 contracts. Right now, we're dealing with 5,900 contracts, and we're at, let's see, what do we got? We get 6 minutes into it. So what you'd be looking for is this. If you get a rejection, you'd have to be above 1136.30. The volume is going to be lighter. It looks like it's going to be lighter because you get 4 more minutes, and you'd have to do, we'd have to see, because you could do it. You'd have to do 5,000 more contracts. We'll see whether we get 5,000 more contracts in 4 minutes. I suspect you're not going to get it. But, I'd wait. That's the bottom line. Just wait. If we go over to the dollar index and just take a look at the dollar index and see the correlation inside the dollar index. The dollar index, by the way, folks, gave it away yesterday in spades, too. Dollar index right now, DXU5. So what the dollar has done, we're at 94.37. We've done 53,000 contracts, and the 53,000 contracts, it looks just like the marketplace. 53,000 contracts is versus the 143,000 from yesterday. Bottom line, nice dead cat bounce, and that's what you want as a trader. Bottom line, that's what you want. If you were listening to Larry a little bit earlier, it's amazing, folks, when these numbers start hitting and these patterns start hitting in a market, a highly volatile market. Okay, you want to wrap your head around them because they hit and they just keep hitting, and they hit for quite a while. We'll see whether that quite a while, 6 months, a year, or, year and a half, or whatever that is. At some point, they stop again, too, by the way. Okay, that's just, well, it's not that they stop, it's that they take longer periods of time in order to do it, which is, if you're trading, that's a bummer, okay? When you have this, this is the time that make sure you stay in shape, make sure, you're basically ready for these markets because, and that you are fast with your fingers, okay? Fast with your fingers, taking bread, ASAP is the name of the game, because it's on both sides too, by the way. What happens in a market like this, it doesn't matter what side you want to trade. I mean, if you're trading, you're going to be trading both sides of this market because both sides of this market works. What you want to be careful of on both sides of the market is about the last hour to hour and 15 minutes. Most of the time, you want to be as clean as you can coming into that area. And if you're not clean, you better make sure that you're on the right side of that trade because closes, as we come into closes, you're going to see some volatile markets beyond belief. Yesterday was a trip, man, in itself. There's no doubt about it. So the closer you get to the close, the less risk to take. The bulk, what I find is this, is that it's at the beginning of the day that all your bread can be made. You can, some of these high volatile days, you can be done by 10:30, 11 o'clock in the morning. That's the reality. The end of the day is good if you're on the right side of the trade. If you're not on the right side of the trade, well, guess what? At any time you can get toasted and not on the right side of the trade. This is Tom O'Brien. This is TFNN. You stay right there. Don't forget, folks, if you're listening in your car right now, TFNN.mobi. You can get us 8 o'clock in the morning, 6 o'clock at night, all live programming. You stay right there. We're coming right back. Dow's up 276, Nasdaq's up 85, S&Ps are up 55. We're going to be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, Nasdaq, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry, powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pesavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on Tiger TV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We get the Dow down 256, the Nasdaq's off 78, S&Ps are off 52. Some of the higher volume stocks in this market right now, you have Bank of America. Let's see, Bank of America is up 66 cents. You got Apple up 468, Facebook's up 378. You have Netflix up 623. Verizon's up 26 cents. You got Best Buy up 385. JP Morgan's up 222. And the bottom line is, which is pretty wild, is that it's not you basically don't have any stocks. Well, I'm sure there's some stocks that are in the red, but when we're looking at there's one, Sun Edison. Oh man, that thing's got killed. That's down 50 cents. Now that's out of the list of 25. Is it 25? Let's see how many I got here. No, it's even heavier than that. So at the list of this is like sick. Okay, up to 56. The first 56 stocks that have some volume in them, folks, bottom line is that they're all in the green. They're all in the green, which is pretty amazing. There's no doubt about that. But guess what? That's what bounces are all about. That's how bounces work out. I expect what you're going to see is, bottom line is that you're going to basically, see equities stay in the green. The volatility's out here. There's no doubt about it. It's out here in spades. And bottom line is it's pretty cool just watching this whole thing shake out. So let me see. Oh, okay. Let's see. Where am I? Let's go to Art in Orlando. Hey, Art, what's going on?
Good morning, Tom, and thanks for taking the call.
Sure.
Got a quick question on charts in general, and I was using Johnson & Johnson J&A as an example. But of what technical significance is the dip on the chart yesterday for J&J to something under 82.5? Is that meaningful from a technical analysis standpoint at some point, or is it just an anomaly you have to ignore? And if so, does that mean you go back to Friday as being the low point for the stock? Or?
This is a great question. So what you have here, folks, is this, and this is just not on Johnson & Johnson. What it is, it's on, many, many charts. And what you have is this, is that Johnson & Johnson, okay, bottom line has a high volume swing low at $81. Now that high volume swing low, folks, was generated on many Dow stocks at the open yesterday because there were market orders in. And this is what I've found, man, and this is like pretty sick, that's going to get tested. That's the bottom line. And the first time that this had happened was in 1999. And I remember it happening. I'm saying to myself, man, I wonder if these things are going to get tested. Because it was the same type. It was the first downdraft in the 2000 debacle. And guess what? Every one of those stocks got tested, man. So some of them blew it apart. So, yeah, they're going to get tested, man. Those lows are going to get tested.
Appreciate it. And thanks for the heads up on Skechers last week. Saved me a bit of money. Take care.
Okay, man. Have a great one. Have a safe one. And it's pretty sick, folks, because what did happen inside the Dow Industrials is that there was a huge amount of equities that, you know, at the end of the day yesterday, if you're listening to CNBC or Bloomberg, they're saying, hey, these equities are up 20% off their lows. Well, they're up 20% off their lows because what ended up happening, unfortunately, is that there was basically market orders in. And, you know, market orders, what happens is that the bids get pulled. That's the reality. And what that means specifically is that when a bid gets pulled, is that there's nothing on the left-hand side when you're looking at a bid and an offer. And if there's nothing on the left-hand side, what ends up happening is that until there is a bid in the marketplace, bottom line, there's not a buyer. And there's never buyers, just so you understand how this works. There's never buyers in bad markets. That's just kind of how it works. What folks will do is that you put in much lower bids and you hope that someone is on the other side, you know, and basically is trying to get out of an equity and you're down 10 points, 15 points, whatever that is, you're down at those lower levels. Because if you are down at those lower levels, guess what? You'll get that sale. That's what it comes down to, and it's pretty intense. There's no doubt about it. If we look at the volume characteristics out here thus far today, what you have is this: is that NYSE is at 279, which is a joke. That's the lowest in the last 6 months, and on the NASDAQ it's 643. Yesterday on the NASDAQ, folks, you want to hear something that's insane? We did 3.4 billion shares. 3.4 billion. On the NYSE, what we did is that we did 1.6 billion. You know, so big numbers out there. And you know, there was a couple questions. I had Brent call me yesterday about TD Ameritrade, and when I was on with TD Ameritrade in the afternoon, I was talking about how stable the execution platform actually was. What you want to make sure of you doing, folks, is this: you get a fast day. You know, I'm sure that the phone apps are great and all that, but guess what? You got to be on. I would be on a computer, period. That's the bottom line. The fastness of the marketplace, okay, if you're going to be trading, it's great that you can put orders in on a phone and all that. I suspect they're not as fast, and you know they may or may not. I'm not sure whether they, but I can tell you flat out, as I said to Chris in the afternoon, when I did a lot of orders, man, and every one of them, they were stable, and it was awesome. And I've seen, okay, bottom line, I mean, I know what the differences are, and I was ready for things that weren't going to be awesome, okay, because that's what ends up happening in fast markets, and you have to be prepared for that. And the way that I prepared for that is that you're always filtering orders. There's always something in, and when you're changing an order, this is crucial to wrap your head around too. If you're changing an order, so what I do is this: is that if I'm going long, let it go up a little, put the stop as it's going up, and then if I'm going short, I just do the opposite. Now, when you're changing that order, because you have the order in, so your risk is when you're changing the order, well, okay, you're changing the order, it's going your way, and you just keep bringing it up, or bring it down, bring it down. When you're changing your order, you want to make sure that you get, okay, so I get like 10 seconds, because what's going to happen, as you put that change order in, it's going to go in, you're going to see it on the screen, you're going to see it change, and then it will change, okay? What you don't want to do is you're not going to be changing an order at the open. Don't even think about it, okay? 10 minutes into the open after that, you're basically in decent shape. But those things are really crucial to wrap your head around if, in fact, you're going to be going in and out of markets. The cleanest thing to do is just don't go in and out of markets. You can take a stand. It's hard to take a stand, too, by the way, whether you're long or short in a market like this. The bottom line is that this is really a trader's market, that you are on both sides, and you've been used to being on both sides, and it's just a different type of environment. If you're going to take a shot at one side, you better make sure that as you take that shot, you are at the top of the range or the bottom of the range. That's it. Do not do something in the middle, because if you do something in the middle, it's going to drive you crazy all day long. You know, these ranges are set, by the way, right now. I expect you're going to see these ranges stay set. The cool thing is here. This is what's cool. So check this out. Right now, we're at 41.65 and the NQs and the E-minis 19.29. As you're trading this, what I would do is this, and this is what I'm doing. Looking at the DAX and the FTSE and all that, they're up a lot more than we are. So I'm trading both sides of it, but you want to be cognizant that your bias should be buying every one of those dips on the way down and selling at the top. And be really careful when you're selling the top, because it's just going to be a matter of what time of the day that we bust through that top. It doesn't mean that it's going to hold, but it'll get up and bust through that top. So that's kind of how you should have that set up. And I'm getting that, by the way, from the aspect of how Europe is holding up. Because if the longer that Europe holds up, the more juice that it's going to say, hey, listen, man, we can bring this up a little. It doesn't have to bring it up a lot, okay? And for the price spread that we have, that's really cool, because what you have out here, the price spread is plenty big enough in order to really get some action going. You know, that's what it comes down to. 877-927-6648. Get the Dow right now up 308. We have the NASDAQ up $1.23. S&Ps are up 59. The gold's down 17. You get silver off 13. Bonds. Let's go take a look at the bond market, because the bond market is definitely the most intriguing market out here. Well, it's not the most intriguing, but what is going to continue happening is that bonds, the 10 years back on 1.3 million contracts today. You have, it did 2.4 yesterday. It took out the high and it took it out with volume. Guess what? When you take a high out, you take it out with volume, bottom line, you go right back at top side. The mind blower here is that this could very well be an ABC structure on the way up, you know, and just blow away everything, you know, because the high that we're talking about is 129.21. And that would set up a 134 10-year. And you know what? You can make the case for it if, in fact, you're in the camp that you're going to take another leg down in the marketplace. Because another leg down in the marketplace, you know, after 2008, folks, okay, just look at something for a second. After 2008, folks are going to be looking at the market saying, my God, I can't believe it that, you know, we've been going up forever. And then all of a sudden, in all of 3 days, you know, we're back to June of 2014. Now, that's not bad, by the way. That's nothing. But guess what? If we take a look at this and you put this up on a longer-term basis, well, guess what? I'm going to make a case that you're going to 165, which is 1650. You know, and you know, if you were listening to Larry this morning, he's up with that 1555 number, and that's a normal deal, man. You know, if you just take a look at the aspect of a normal market, never mind just a normal market, a 50% retracement, which we haven't done, is 1400 S&P. 0.382 is 1580. That's a normal move in a market that can continue, by the way, to go higher. That's what's so bizarre about a move like that. So some of the Dow stocks, let's take a look at some of these Dow stocks out here. We haven't, there she is. Inside the Dow Industrials, you got Honeywell up $1.80. You got IBM up $2.25. Johnson & Johnson's up $1.30. Exxon's up $1.85. Disney is up $3.31. And they look like high numbers. But guess what? You know, Disney is down from $122, and you're talking $98. Okay, just monster numbers. We go to the IBB. IBB is up $9. It was as high today as $3.45. It was up $19. We have 866,000 shares traded. Yesterday we had 4.8 million shares traded. You know, so bottom line is that AMGN. We take a look at Amgen. Amgen right now is trading up $4. That's off a high of 181. You hit a low out here yesterday of 140. Man, these are haircuts extraordinary. And we're trading out here right now at the 152 area. Now, what's kind of neat about Amgen, it's going to be interesting to see how this holds into the 140 area. The 140 area is crucial for Amgen. And, thus far, even on that downdraft, it's not a bad setup. I wouldn't be buying it right now, but bottom line is that down at that 139 to 127 area, that might be game down there. It certainly might be game. Let's see. Yeah, the gold stocks are holding up, man. This is impressive inside the aspect that gold is down $17. An Eagle, down $1.11. We needed a lower low just because of yesterday, and the volume's drying up. When I started the program, which was 42 minutes ago, we're at 1.2. We're only at 1.7 right now. That's a good indication that the volume is drying up. Now what you want to see, if you like an Eagle, you want to see a rejection of $23.81. Right now we're at $23.57. Rheingold Resources, what you have with Rheingold is that she looks like she's going to reject the whole ball of wax, which is pretty impressive. She did 1.4 million shares yesterday at 538,000. So we're going to get some more action inside that market, and we'll see how that whole baby does hold out. The Apple, let's go take a look at Apple. They got Apple going up here, and bottom line is that this is a beautiful setup, man, meaning a beautiful setup. Apple can basically get up to Apple can go to like 117, 121. And she's got that high volume swing low. That'll be a monster ABC structure on the way down. Huge, too. Huge. Because Apple absolutely took apart. Is that look at that. Apple went right to the October low. $95, and Apple yesterday got to $92. That October 2014 low, folks, is not only gain. It looks to me like that is going to basically get taken apart, just as the NYA. In fact, when we come back, we'll go through the NYA, because the NYA was the first indice that got down there and basically ripped it apart. The Dow right now is up 285. The Nasdaq's up 117. The S&Ps are up 55. We're going to be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. And don't forget, folks, you can get all the programming at TFNN right on your cell phone, tfnn.mobi. If you, each and every morning at 10 o'clock, I do a market update. You can get that market update right on YouTube, TFNN. You can also get it on our Facebook page. It's TFNN.Corp, TFNN Corp. So check it out when you get a chance. Dow right now is up 302. You get the NASDAQ up 118. S&Ps are up 57. No, 57. Let's go to the oil market. So what we have out here with oil, check it out. Let's bring this baby up. Okay, so this is pretty amazing that oil can't handle $40. Oil right now, when that came down yesterday, it was vicious. I mean, it went south, and it went south with some real juice. Thus far today, we've done 178,000 contracts, and yesterday we went downtown with 468,000. So what that sets up is that sets up, number one, a test of those lows. More than likely, what I suspect we're going to see is that you're going to go after the 2008 levels, which is just like, it's hard to actually believe that oil will be back down into those lower levels. But see, there's nothing to basically stop it from doing that at this particular point, because it's broken everything else. And when you take a look at this, we set this baby up, it's like, okay, so the highs of all these lows, this is how this works. The highs of the very low was $54. The lowest high I can find is $45.30. So bottom line is that we're already below that. Once you're below that on a monthly basis, it's like the probability just goes up higher that you're going to go test those lows. And because we're only $6 away from it, and in fact, yesterday, the continuous contract went down to $37.75, which would have been only $4 away from the $33.50. So these are the three levels. The low of February of 09 was $33.55. The low of January, so that February was $33.55. January was $32.70, and December was $32.40. That's where we're going. And we'll see how we test those levels down there. You test them. What has happened is this, which is pretty cool. You've coming down with dramatically lighter volume. So the real key is going to be, how do you hit them? And as you hit them, do you, in fact, basically reject them? What I would do, if you're going to get your head wrapped around that, is that simultaneously, I'd go over to the XLE, I'd look at the XLE and say, okay, how are we hitting the lows inside the XLE? Because the XLE is trading the exact same way, and the XLE actually has been a better indicator about where oil wants to go. Now, we're at 61.24. If the XLE closes the end of this month at 63.43, if it closes above that, guess what? You want to start trading those oil stocks, because what will end up happening, the range will, the XLE can go up to $90, and we're at 61 right now. So what's really cool is that because we're coming to the end of the month, we're going to see a lot of information that's going to get released into the marketplace. It hasn't been released yet because it's crucial to put the volume together with the rejection of price. And then what you have to do is this. Then you want to look at the consolidation price points and see where the top of the consolidation is. What does happen with the ExxonMobils and the Chevrons of the world is that they love large consolidations. That's what they love to do. If I pull up Exxon for a second, bottom line is that I suspect it's going to be from, 69 to 71 to 8, no, to 81. They're big numbers, man. You stay right there, folks. I'm Mr. Basil Chapman's going to be coming up next, growling a problem with you. Then we get TD Ameritrade, Steve Rhodes, Dave White. I'll be back this afternoon, and Andy Hecht. Have a great one. Have a safe one. Thanks for being here, folks.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.